Good morning, one and all, and welcome to this morning's video. I hope you had a great weekend, and I hope you are ready for the week ahead as I am. So this week I have three pairs on watch. Those are Aussie yen, or this Monday, I should say, I have three pairs on watch. Those are Aussie yen, Euro yen, and CAD yen. So it's predominantly about the yen this week. The yen's across the board looking like they're due for a sell-off, but in trading, we never know what's going to happen, and we have to remain neutral. But with this in mind, let me start off with my favourite of the bunch, which is Aussie yen. So on the higher time frames, the things that stick out to me initially are that we have a near miss up here to this high, and we have a kind of near miss to here, near miss to here, and a near miss to here. These near misses tend to get filled. However, we are on the weekly chart at the moment, okay? So they don't necessarily need to be filled straight away, okay? When we near miss to an area, what we typically see is a corrective move like this, okay? Because typically speaking, the orders that are still up here and the orders that are being placed there are dragging price up whilst people are trying to sell this, which is what causes, to some extent, this corrective move that we can see here, okay? And then what we typically see is a more impulsive move back up, which is, although this is corrective to some extent, you can see that this move was more direct than this move down, giving me a clue that at some point we will take out these highs and this high, which we near missed to, before a more aggressive move to the downside. But again, that doesn't need to be filled necessarily straight away. And you can also see that we have a near miss down here to this low, meaning that at some stage, given how far up in the run we are, we will likely take out this high and then come back down to here to take out this low, which this low near miss too, okay? But again, that could take some time to play out. What stands out to me is that we have a series of near misses to here, this area of value, where there was a very aggressive sell-off last time around, okay? If there was a very aggressive sell-off, that likely means that there was a big exchange of liquidity here, meaning that if we keep near missing to this area, this is likely to be the area of value. And note here, note as I zoom in, that we have, on the higher time frames, I'm always talking about, if you find my videos repetitive, if you watch them regularly, good. We're not trying to reinvent the wheel every time we trade. What we're trying to do is create or follow a repetitive set of instructions, because obviously the more repetitive what we do is, and if some people find it boring, that may be good as well, because what we don't want is, when we're trading large accounts, is we don't want something that's exciting. We want something that's boring or repetitive, whatever you want to call it, so that it doesn't cause too many emotions. I've been speaking to people yesterday about trading, and you can tell by the language that they use and the things that they say that it's just an emotional roller coaster for them, and no wonder they're not profitable. Okay, now one of the things, just going off on a tangent there, on the higher time frames, we typically break above a high if we're going to move to the downside. Okay, for multiple reasons. We usually break above, catch people the wrong side of the market, and then move to the downside. So when I see this here, which many of you will be able to identify as a double top, I'm not surprised that price comes back up, okay, and doesn't commit to the, a bigger move than this, because there was likely still orders up there above price, dragging price back up. And when we break above, that is usually when people start buying before they get completely washed out, and then a move to the downside occurs. So although this is bullish, because we wicked through the area of value and not just to it, as we did here, I'm seeing this at this moment in time as a washout of all of the orders for a potential move to the downside. We could come up and fill this, but that's not what I'm seeing at the moment. And if we just drill down, one of the things that kind of cements that idea to some extent is that we have this evening star formation. Okay, we have the bullish candle, we have the stall in price, the star, and then we have a bearish candle which retraces almost the entirety of the previous candle. So this is a confirmed morning star formation, or evening star formation rather, which also closes back below the area of value, giving me a clue that once again this is likely just a washout of orders. We also have this kind of 1, 2, 3 there, okay, where we have a impulse correction continuation, and the middle section is actually the more corrective leg, which is typically what we see. I believe I spoke about this in last week's video. I said that that would likely be what would happen, and this would become the middle section. Well, that's exactly what happened. And if we measure this here, so I'm measuring the impulse within the impulse correction continuation. If we measure the impulsive leg out, that's of a similar length, implying that this is a completed move. Okay, so it's just nothing overly complicated. It's just repetitive patterns over and over again. People say things like, well, patterns don't work. Well, that doesn't even make sense, because a pattern by definition is something that repeats itself. And these are just examples of human behavior. And people think, well, human psychology might change over time. Well, these patterns are largely based on Elliott wave theory, which was observed in the 1930s. And R.N. Elliott, who discovered or created Elliott wave theory, was observing patterns which dated back to the 1860s, okay, in one of the financial newspapers at the time. So human behavior hasn't changed since the Garden of Eden, to coin a phrase. So there's no reason to suspect that it's going to change any time soon, especially given that these patterns are largely based on people's impatience. And we know with the kind of Amazon Prime mentality that people are becoming more impatient, if anything, not less. Okay. So you can see here that we potentially have this impulse correction continuation for a move to the downside. Okay, so that's becoming quite clear. If we measure this, from here and assume that the leg out would be of a similar length, what do you know? That takes you down to there. And if we measure it, we don't know where this looks underdeveloped at the moment, but if we were to measure it from the break, wherever the break might be, that would take us down to here, where I would anticipate a stall in price. Okay. So with all of that in mind, what I'm going to be looking for today is the following. I'm going to be looking for price to correct a 3-touch 1 hour continuation, or a 2-touch 1 hour continuation with a 3-touch structural approach. You might be thinking, is this not ready to go already? Well, it may be, but one of the things that I notice here is that when we if that's the middle section, we kind of break out. We've kind of broken out of all of that. That doesn't really look like it's completed to me at the moment. It kind of looks, especially how we're moving down, like this is a middle section to push back up to give us that. Okay, when you've seen these flags enough times, we may commit from where we are already, but I've not seen that many examples of flags which look like that, which play out. So when we so I'm just seeing this is a flag which needs a little bit more time to develop, which is why I've got my alert set just below this high. And if we get something like this, or we get that what I call the 2-touch with a 3-touch structural approach, which would be something like that, then I would look to get short from the top with a risk entry, as I've drawn it here, after a retrace or a pin bar, so a high test or a retrace candle. Okay, such as that red one there, something like that. That's what I would be looking for to get involved. And that is what I'm going to be looking for on Aussie yen. So I'm going to move on. So we've got Euro yen. It's going to look pretty similar across the board at the minute. The yen's doing a similar thing across the board. If we just zoom out, you can see that we have that very, very sharp sell-off again. So at some point, given how far up into the move we are, we had this structure here. We had this, but when it's become, this is more looking like a reversal structure rather than a continuation. But when we have a consolidation which is that wide relative to the move down which has preceded it, it becomes more neutral, and a move back up to these areas becomes more likely. Okay. But again, just as with Aussie yen, that doesn't mean that we can't capitalize on a move to the downside in the meantime. So as I zoom in, very similar story. You can see that candle which we saw, that weekly candle which we saw on Aussie yen. We're seeing it again on Euro yen as well. So I'm just seeing this once again as a washout of the orders that were up here. Okay, we have, what I like about this as well is we have all these near misses down here. So maybe we come back down to test these areas, but I'm not seeing that because, again, when this is kind of the middle section within a piece of structure, when the middle section is kind of impulsive and the move into it is corrective and the move out of it is more corrective, that gives me a clue that that's just not really how a structure is made up. How it's made up is a little bit more like this, okay, where we that is corrective to some extent, but we do at least have some kind of corrective move down and a more impulsive move up, giving me a clue that perhaps we could be seeing a move down to here. Okay, and you might be thinking, well, why is your target arrow not pointed down to here? Well, it's more to do with the fact that if we did get a big run down to here, I would expect some, even if we did continue, I would expect some profit taking in this area, which could cause price to consolidate sideways for a period of time. And I'm not really interested in sitting through that, particularly as we can often pull back 50% of the move before continuing in the forecasted direction. So it's more about not leaving too much profit on the table and not sitting through these larger consolidations, which even after you've sat through them, it doesn't mean to say that price is going to keep going. Price could do something more complex, and then you sat through something for a long period of time expecting it to do something, and then you sat through it for no reason. So what I'm seeing here is, as with Aussie yen, I meant to touch on that. The last part of this move had a bit of momentum behind it. That is usually just people getting out of their positions before people start buying. You can see here, I'm sure many people thought this was a retest after this candle. So they started getting long, thinking that this was now support. They start getting long and then boom, they get washed out. Same human psychology over and over again. Okay. So you can see we have quite a bullish 4-hour candle there. So I wouldn't be surprised if this consolidates for a period of time. Often these bullish 4-hour candles, particularly if they have a bit of a wick underneath them, cause price to consolidate sideways for a period of time. But what I'll be looking for from this pair today is pretty much the same thing. I will be looking for either that 3-touch 1-hour continuation or that 2-touch 1-hour continuation with the 3-touch structural approach. Okay, so what I've done in this instance, because this doesn't really have a base at the minute, okay, so we kind of have one bottom. What I'm looking for, and I've set an alert there, is I'm looking for price to come back down, do something like that. It doesn't necessarily have to have the crystal clear middle section, but something like that. And then boom, we have that. And then I would look to get short from the top there. You might be thinking, am I not worried about this? There's a hook point sat just above, okay, where there's often liquidity. Well, as a rule of thumb, what we do is we measure the range. So if I was to measure the range from there to there, if the hook point is more than 50% of the height of the correction that we're looking to trade within away, okay, so in this instance, it would be about 95%, then that's fine. Okay, that is too far away, and there is not enough volume built here to cause that kind of M style where we see price consolidate sideways and it becomes more neutral, and then price pops up, that kind of thing. Okay, there is not enough volume built here for us to typically test that high. Of course, the market can do anything at any time, but from testing, that's what I found to be the case. So I'm not worried about that up there. Okay, and if we just zoom in, I'm pretty sure, if I remember rightly, you can see that there was a bit of a sharp move there, and this high was likely just price coming up to test that high to take out the liquidity that was there before we move to the downside. Okay, so I'm not worried about that. And also we're trading below here now as well. So if we've come back up there and now we're trading below here, this becomes less relevant as well. Okay, so that's euro yen. We should see how that plays out. If it just blasts to the upside, if it just starts to keep going, then I'll just take it off of watch. I'm not interested in FOMOing into any trades. So CAD yen, a similar deal once again. If we just zoom out, so once again on the higher time frames, we have this high here, and we have a correction which is very wide relative to the move down which has preceded it, suggesting that at some point we might get that M style pattern where we end up with this or W. We test the high and then we drop from there. However, once again, in the meantime, that doesn't mean to say we can't capitalize on a move to the downside, a shorter term move relative to that higher time frame weekly or monthly direction. Okay, so once again we kind of have price is creating a lot of extensions at the moment. So we kind of, we have this. Well, we had that structure. Price comes up and tests the highs, then it doesn't fully commit. It commits in a corrective way, suggesting that we'll likely get a more impulsive move up. We test the highs again, then we scoot back up. And although it's, you can see it keeps creating extensions, there's still potentially profit to be made down to here, for example, even if price does that again and creates another extension of itself. Okay, so we don't need to be right in trading to know what's going to happen next. Okay, we don't need to know what's going to happen next to make money. That's what I meant to say. Okay, so you can see once again, I'm just seeing that weekly candle as a bit of a washout. We wick above price, we wick back down, suggesting that was a washout of all of the orders, potentially. We have a confirmed evening star formation. We break above the area of value, confirmed evening star formation, and potentially we could capitalize on a move down to this low, okay, even if this was to become a base, and then we had that kind of 1, 2, 3 structure there. So as long as you can get your risk off the table, it doesn't matter what so much what the higher time frame direction does. Okay. If we just zoom in, very, very simple, you can see that we have, just zoom out again slightly. We kind of have this expanding pattern to some extent. Okay. Where we have more of this, and then that becomes the middle section. Okay. And then we have a more impulsive move out, a little bit of momentum at the end. And now we have that impulse correction, potential continuation for a move to the downside again. The market has well and truly shown its hand. So what I'm going to be looking for in this instance is not really a great deal to talk about. I've pretty much explained on the other pairs everything that went through my thought process when I was putting these pairs on watch. But once again, you can see the consolidation starting to form. We need a bit more of a base here in my experience. So if we get that bit more of a base like that, we come back up, then we would have that kind of 3-touch structure there. We may even have a little 3-touch structural approach if I was to filter this on the 15-minute chart. So once again, I'll be looking for that 3-touch 1-hour continuation or a 2-touch 1-hour continuation with a 3-touch structural approach, and I would filter this on the 15-minute chart. Okay, if it looked like it was if we got that second base and we started to push up, and then I would be able to, just to touch on it, how I would manage this and how I'd manage the other trades is I would take the Fibonacci retracement tool and I would measure from this range here to the base of this range. And then what I would do is I would set a take profit at the 90% mark, because this is typically where price can pull back about 50% of the move, which you can see there would represent a lot of profit in terms of relative to my stop loss. And then I would simultaneously trail my stop loss, and then we have a profit potential there of 18 to 19%. Okay, and that is what I'm going to be looking for today, folks. This would kind of be my first solid target, because you can see that there was an exchange of liquidity, a sharp exchange of liquidity there. We kind of have this structure here, which price broke out of. So we had an impulsive move out of that, and it just so happened to retest the back end of that sharp move as well. So that would be my first target. I don't think it holds much weight. I don't think the bigger players would be paying too much attention to that, but just as a first target, that would be where I would target. And then, of course, if we break through that, I think this would likely be all systems go for that move down to the bottom of structure there. So that is what I'm going to be looking for, folks. I hope you've taken some value from this, and I will likely be back tomorrow with another one of these videos. Have a great day, and I will speak to you again soon. Thanks for watching.